agriculturally based economy towards a middle income and more diversified economy. Today we take a closer look at the southern African island and unpack the business challenges and opportunities it presents.
Located in the Indian Ocean and covering a total surface area of just over 2,000 square kilometers, the island of Mauritius is home to roughly 1.3 million people. The Mauritian four-pillar economy, made of sugar, textile, tourism and financial services, has displayed a reasonably solid macroeconomic performance, but the country still remains fragile to the uncertainty of the global environment. Although GDP has slowed marginally to 4.1% in 2011 from 4.2% in 2010, the country presents positive growth prospects. Growth for 2012, however, is projected to grow at a rate of 4% due to subdued demand in the Eurozone. Just being a net importer of goods created a trade deficit, which further widened due to strong trade links with the European Union. Other trading partners include the USA, to which it exports textiles, sugar and fish. Import partners such as India, China and France, from where manufactured goods, equipment and petroleum are sourced. Initiatives such as the Integrated Resort Scheme, aimed towards the construction of luxury villas and golf courses, has had countries such as Great Britain, France, USA, Madagascar and Italy investing in the country's tourism sector and trapping foreign direct investment. The island of Mauritius has made a lot of progress in its campaign for social equality and poverty reduction, ranking among the above-average income countries on the continent, according to the United Nations Development Programme. Although youth unemployment rate has fallen marginally to 22% in 2011 from 22.5% in 2010, it is almost as high as the national unemployment rate, making youth unemployment a major challenge for the island of Mauritius.
Well, joining us in studio now to take a closer look at Mauritius as a business and investment destination is Kemp Munnik, Head of International Tax and Advisory Services at BDO, and James Ellis, who's MD of Atterbury Property Developments as well. Welcome, gentlemen, and thanks so much for joining us today. James, let's perhaps start off with you, because we're all too familiar with Mauritius as an attractive tourist destination. What about its standing as an investment destination? Where does that rank in your books?
Well, we decided to invest in Mauritius. We are commercial property developers, and we really decided to invest in Mauritius as part of a bigger investment strategy into Africa. We managed to source a development in connection with the E&L Group, who have participated in a process that government instituted, converting sugar land into commercial real estate as part of the ability to get off the dependence on sugar. And as part of that initiative, the E&L Group, which is a big in the sugar industry, had a plot of land, 100 hectares of land, 7 kilometers outside of Port Louis, where they intended to do a commercial development. And we managed to tie up that land together with them and develop the precinct that we did.
Yeah. So certainly some encouragement coming through for property developers in Mauritius. You've got to ask the question, though, Kemp, where some of the features that make Mauritius a paradise island, the country's remoteness, the size, for example, where those have acted as deterrents to investment in the past, just of a consideration those get paid right now for investors looking in.
I think from an investor's point of view, it still remains issues that need to be considered, the remoteness and the smallness of the country. But I think looking at what we experience currently is a lot of international companies use Mauritius as a springboard, I think, as James has mentioned, to get into Africa as well. And in a new budget document came out to Mauritius, and they actually wanted to make that work more better. There's a lot of incentives going in there to go into Africa, more double tax agreements to be signed. So they really want to make it much easier from a Mauritian perspective to deal with Africa, because I think there's a need, they see the need and the requirements from international companies to use Mauritius to go into Africa.
We'll be getting into the detail of Mauritius and its standing as a conduit for doing business on the rest of the continent. For now, though, let's take a look at the Mauritian growth story specifically, James. I mean, just how this growth story are we looking at here? Because the insert highlighted that, we had growth sitting at, just over 4% in 2011, but the warning bells are ringing that 3.8% growth for 2012 may not be achievable, and that due to slowing performance in the tourism sector, in the sugar production industry, as a result of all that's going on in the global economy. Just how comfortable are you with the growth story that Mauritius is putting on the table?
I think it needs to be recognized that Mauritius has got a limited economy. I mean, it's a small place, and it's got a 1.5 million person population. So I think it's unrealistic to expect that you can keep on growing and growing and growing. So we have invested. We've built a 40,000 square meter shopping center there. I don't think there's necessarily space for another one. However, the investment that we've made is trading exceptionally well. It's something modern, and there's nothing like it on the island. So from a commercial real estate point of view, I think it's about the timing. It's there's certain products that the island needs, and once they are there, I think there's limited growth in those specific sectors going forward. However, we've got, as another phase of this development, we're doing some office space, as opposed to in South Africa where we might do 10, 20, 30,000 square meters at a time. We're doing it in smaller chunks, 2,000, 3,000 square meters at a time. We still believe there's a place and a market for good quality real estate, commercial real estate. But I think it needs to be seen in the context of the size of the island.
With that having been said, Kemp, we've got to draw attention to some of the other sectors on the, over in Mauritius that are drawing attention. What are some of the other investment hotspots that are certainly not as well known as that of the tourism and sugar example?
I think to mention a few, the manufacturing, they're really trying to enhance incentives in manufacturing for companies to do manufacturing there. Also in the hospital medicine area, there's a new bill out for trials and clinics that they want to get going. So I think that's also two of the industries we believe, and we see when you're looking at their budget speeches and stuff, that they want to encourage to come to Mauritius to diversify a bit more. I think they also realize the limitations of the economy with the sugar and the tourism, and they need to expand into other areas of business as well to keep going. I think that's quite important for them, and they're trying to. I mean, we'll still have to see if they're able to do it because of the remoteness, etc., and the skills shortages maybe there in certain industries. But I think they're definitely trying to diversify more to get the economy going.
Well, as Kemp's highlighted, that budget speech drawing emphasis to the kind of commitment they're putting on the table from government side in incentivizing FDI. We've had incentives being put forward in the Freeport, ICT, financial services, tertiary education sector, and even emerging markets like renewable energy. James, while it's all good talking about the investment incentive, I mean, it's the numbers that perhaps illustrate the appeal a little bit more definitively. And when it comes to the FDI and the kind of flow we're seeing into the country, the real estate and construction sector has accounted for, I'm reading here, more than 40% of the total influx of FDI. I mean, the sector accounts for 19% of GDP. Just talk us through the draw cards as you see it, and just how stiff competition is getting on that side.
Look, I think that construction sector number also includes the RS and the RES residential schemes, which have been an incentive from government, and I think have been quite successful. You can invest in real estate there, and there are a lot of benefits that you get by becoming an investor there. So I think that has stimulated the construction industry to a large extent. The hotels keep growing. I don't know exactly how many there are, but there are many. And if you drive around the island, you'll see the commercial property development is happening all over the island. We happen to be located in the center, 7 km from Port Louis, so that is where most of the people are. But certainly all over the island, there is construction activity taking place.
With that activity taking place, one can only assume that the competition is stiff, and that would be relevant for construction players, for developers, because it has implications for margins.
The competition is stiff, but there are also only a limited number of players in the industry, as is in any industry in Mauritius. So there is competition, but I think it's fairly well balanced.
Kemp, let's take a closer look at the package of incentives that's provided to investors. Certainly in the leisure and real estate sectors, we've got low corporate tax rate of 15%, exemption from customs and excise duties on imports of equipment and raw materials, free repatriation of profits, dividends and capitals, reduced tariffs for electricity and water as well. What do you make of mechanisms like these being used as incentive draw cards and their effectiveness?
I believe in the case of Mauritius, it is quite effective because, as I said, that's a springboard into Africa.
Yeah.
And where they're going with double tax agreements and the incentives they put in place to draw more business into Mauritius, the companies do look at that, and it plays quite an important role. They might be losing out on quite a bit of money, but I think for them, the way I see it is they're more interested in getting more business there, and with the volumes they're going to create, hopefully with this, they'll cover the potential losses on taxes they might lose because of the incentives.
For now, at least. What happens down the line? And, what are the incentives like that? Because what if down the line, out of necessity, these terms need to be changed and those long-term contracts or agreements actually need to be amended? I mean, certainly here in South Africa, we've learned how well-intended agreements struck in the past can actually become a risk when rules change, and it becomes difficult for business to actually navigate around it.
Yeah, the problem is that might not be sustainable. I've been there, those incentives for quite a while now, but if I don't get the volumes, it might not be sustainable, and then I have to change it or up the percentages, and that might then actually work against what they're trying to achieve. So it's always a risk having these type of incentives. On the one hand, you try to encourage business to come, but on the other hand, the government might lose quite a bit of money, and if they don't get the volumes they were hoping for, they might lose out big time, and it might hurt the economy.
Yeah, James, I guess for any investor, it's really hard to ignore the fact that governments worked at making sure that doing business in the country is easy, it complies with best practice. Your experience of the ease of doing business from a regulatory perspective in the country?
Well, certainly our investment program into Africa started in Mauritius, and one of the main reasons for that was quite simply the ease of doing business in Mauritius. It really is, in an African context, an easy place to do business. They have systems, the systems work, the government is approachable, and we have had no problems in getting work done in Mauritius.
I've been reading, Kemp, that in addition, the government has, in the Finance Act, introduced various schemes to actually promote foreign investment with the minimum intervention from Mauritian authorities. Just how easy a feat is that to accomplish? Because worldwide we see more so governments, African or not, becoming a lot more protectionist within the current economic environment.
I believe they will be able to achieve it and not getting too much involved. As James has mentioned, the ease of doing business in Mauritius is quite good, because if you look at the latest rankings from the World Bank, out of 185 economies, they're number 19, I think, if I'm not mistaken.
That's exactly it.
So it's quite easy to do business there, and I think that was a success of the Mauritian government, not getting too much involved, too much red tape. Although you have to have a look at, from a South African perspective, that there's challenges when you come to from a tax point of view, from an effective management point of view, to make it much more difficult to actually set up a proper business here. And therefore, you need to take those risks into account. But we're also experienced to setting up companies and to doing all those legal requirements and get the business going. It is actually quite easy to do it.
Well, let's leave the conversation there for now. At least we're heading into a quick commercial break, but there's more on Invest Africa right after this.
Invest Africa, brought to you by KPMG.
The East African nation of Rwanda has gone through significant changes since the mid-1990s. From a country devastated by genocide, Rwanda has transformed itself into one of Africa's most open and fastest-growing economies. Doing Business in Rwanda is your monthly look into the business and investment opportunities in the country, giving you a glimpse into what the Rwandese government and business communities are doing to rise above the ashes of its past. Catch Doing Business in Rwanda every third Monday of the month at 6:30 p.m. Central African Time, only on CNBC Africa.